Good morning, traders. Welcome to this morning update on Friday, the 6th of May. I'm Tom Colley, and I'll be taking you through the markets and the news today. We will be paying a particular attention to non-farm payroll this afternoon and the effects that might have on the US dollar and the equities in terms of the S&P 500. Before we go over to the news, just worth mentioning the Phoenix Blue website is now up and running at www.phoenixblue.co.uk. If you're new to Phoenix Blue, you can get so much more information there, contacts, details of exactly what we do and how you can become involved. Okay, first off then over to the news. Yesterday, relatively quiet on the news. We had some positive overnight retail sales and trade balance on the Aussie. The pound, we had some negative services PMI figures, and then we had unemployment claims from the States coming in above the forecast. That's unemployment above the forecast. Is that an indication of what non-farm's going to give us this afternoon? Well, historically, not necessarily. We'll just have to wait and see on that. Now, overnight, last night, we had the RBA, the Royal Bank of Australia monetary policy statement. What came out of that was the Reserve Bank of Australia have reduced their inflation targets, or not so much their targets, their inflation expectation. So that will be taken as a negative by the market in the current environment. Okay, so going forward to today, obviously the major news is the non-farm employment change, but also quite significant is we've got employment and unemployment for the Canadian dollar. Why is it so significant? Well, last month we got some unexpectedly really positive figures here. And then in the intervening period, we got some really positive core CPI and core retail sales figures a couple of weeks ago. However, that was has been offset earlier this week, where we had what we can see here, which is the Canadian dollar trade balance, and this is the numbers that came out this week, which are the worst figures for trade balance that we've had that are on this record, which goes back to 2000. So a real sort of extremities from extremely good in some areas to extremely poor in others on CAD. So it'll be interesting to see what we see in these employment change figures here. I think the recent positive data maybe even prevented the Bank of Canada from reducing their rates last week. Then we come to the non-farm employment change. This is the number we're looking at. Target or forecast is 203,000 this month, but possibly and over the last few months of more significance has been the average hourly earnings. This tends to describe the quality of jobs rather than the pure numbers. We've had consistently good employment on the increases in the US for the last year, but any fall on this number will certainly be taken negatively, and any rise above the forecast will be taken extremely positively. Okay, before we go on to non-farm itself, just a quick look at the Asian markets. We've come to the end of the week, so we're looking at the weekly charts. Here's the Shanghai Composite, the composite of the Chinese equities. We had a bullish start to the week. That's been somewhat offset. We had some worse than expected manufacturing PMI figures showing that the economy or the manufacturing side of the economy is still contracting. They were the cakes in numbers that came out, which tend to be the more believed or the more accurate, the presumed more accurate results. Over on the Nikkei, well, after last week's massive bearish bar there, we've had somewhat of a reaction to the 2015 low level here, but clearly not a recovery from that. I've got a trend line in there. Any break of that, and I will be looking to short this market. Okay, so over to the non-farm payroll today. Now, where we're at with this is the Fed last week said that any rate increases were data dependent. So this is the biggest data that comes out for the Fed. So this is what's going to be significant. Now, if we get some good figures, and remember we were particularly interested in the average hourly earnings, that means there's an increased probability of the Fed raising rates. Now, what does that do to the dollar? Well, if the rate increases, it makes it more attractive for people to hold cash in US dollars, so that should lead to a rise in the value of the dollar. Conversely, that should, if the increased probability, or should rates rise, that tends to increase the cost of business. The S&P 500 and the equities measure the profitability, for the sake of argument, of the companies in America. So if they see their potential costs rising, their profitability dropping, we'll expect to see a fall in the S&P 500. Now, if we get bad results, there'll be a decreased probability of a rate rise. That should put pressure on the dollar, and we'll see some downside on the dollar and somewhat of a recovery on the S&P. Now, in terms of the rates themselves, currently US rates are at around 0.5%. Now, the last time they raised the rates in December, it was a 0.25% rise from 0.25 to 0.5, and that would be the maximum that we'd expect in the next potential rate rise, which we might be looking at next month in June, dependent as the Fed say themselves on the figures. Now, that may seem like a very low rate, but if you look at this list of current rates, if that rate was to rise to 0.75%, that would put it above the pound, above the Canadian dollar, into third place here. We've had an Aussie rate reduction down from 2% to 1.75, and the markets tend to be expecting in the not too distant future a rate reduction from the Bank of New Zealand. So you could see how that might have a more positive effect in what is a hugely low rate market as such across the world. Okay, now let's see how that looks when we relate it across to the charts. Here's the US dollar index. I'm showing the weekly. We haven't finished the week yet, but what we've seen this week is we saw price come down to this key level here. Price broke through that. That cost us a trade on the Swissy earlier in the week, on Monday I think it was. We did expect that level to hold before price bounced back. Price came down significantly below that. There wasn't actually a technical level that we had or we could find at the point that actually turned, but then since Monday you can see we've had a very, very bullish midweek. We're above this other key level here. If we get the strong non-farm payroll figures this afternoon, we could potentially see the weekend with the US dollar index above this key level here, which is $94. Obviously, if we get some negative figures, we could quite possibly see ourselves down this lower area, back down here. Now, if we look at where we are in the S&P, this is particularly interesting. Our bias is short equities at the moment. At the moment, we're approaching a key level here, which is about 2040. Now, if we get some strong data on the non-farm payroll, we can expect the S&P to react, break this key level here. We're already short this market. We'll be looking to trade the retracement back to that level, taking it short again. However, if the data disappoints in terms of a rate rise and a rate rise becomes less likely, or we could see a recovery in the S&P, but for me, I will still remain bearish until we get beyond this level here, which is a significant level, but also you can see I've marked in a head and shoulders here, so I'll be looking to get back into the market there, because I believe that if the data disappoints somewhat today, it's only a matter of time before we get some better data which will bring us back down to the short side, and for me, once we're within that head and shoulders below that level, then I'll be targeting the bottom of the channel down here on the S&P, but also you will see a very, very similar setup on the Dow and also the Nasdaq. Okay, this week on the euro, well, almost the net result of the dollar coming back in with some significant strength this week has meant all the majors and minors have created significant turning points. Here we can see a big high test bar, pin bar, whatever you want to call it. Again, we're on the weekly chart, but it's sort of weekly pre whatever happens in the NFP. Clearly bearish again, that market. If we pop over to CAD, we can see this market, we're bullish in this market. That's also been driven quite strongly by the really negative trade balance figures that we spoke about earlier. As you can see, I have an order in here for a retaste of the channel on the daily chart. That news seems to have driven it harder than that, and I don't now think we'll get a retest of that. That trade will be closed sort of midday today before it's the risk of it being triggered by non-farm payroll. Over on the Aussie, well, a hugely bearish week so far on that. We had a rate reduction from the Reserve Bank of Australia, and again, like on the Canadian dollar, I had an order in place, or we had an order in place for a retest of that trend line on the daily. The news has taken it too strongly that then overnight we had the reduction in the the lack of, what's the word I'm looking for, the Australian inflation expectation being reduced. So again, that drove the market short. So we can see a hugely bearish week on the Aussie there. The only currency that really has not turned absolutely significantly is the yen. We've had a lot of yen strength recently. We've had the failure of Bank of Japan intervention to turn the market. That still remains the case. Although we've had a bullish week to date, it's not been significant to the extent it has in all the other majors and minors. Okay, so that wraps up the morning updates for the week. Non-farm to come today. Be interesting to see if any of those scenarios play out and how they play out. What we've been looking at here is what we call our pure analysis, clean charts. If you've seen, you find much more detail on these on the Phoenix Blue website. If you want to ask any specific questions, info@phoenixblue.co.uk is the email address. If you just want to talk to us, or if you want to set up a consultation so we can have a chat to you about how your current trading would fit in how we trade and how we might be able to move your trading to the next level. Okay, have a good weekend, everyone, and we look forward to speaking to you again on Monday. Take care.